Good morning, everybody. Good morning. Good morning. Let everybody file in here real quick. Good morning. Hope everybody's doing well, staying warm wherever you're at. Good morning. Heat wave in the Northwest. Nice. That's good. Hopefully you're out by Bandon Dunes. Don't know if you're in Washington or Oregon, but good morning. Good morning, good people. Seattle. Nice. Cool. I was out there a few years ago. Had to do some training out there. Quick story. Well, yeah, I guess I butched that. That wasn't a few years ago. It was a while ago. So Atlanta, nice. Welcome. Yeah, you guys just barely missed that ice storm in Atlanta, just barely. So I'm in East Tennessee. So Butch Dad, I flew out there to do some training, and they had opened one of the first Tesla dealerships in the mall. I can't remember what the name of the mall was, but I went there, and this side note, sorry everybody, and there was a young kid in there that was actually an engineer from ETSU, which is East Tennessee State University. So I was living in Knoxville. So we got to talking, and he said, "Hey, I just got a demo Tesla in. Do you want to come back after we close and drive it?" I was like, "Yeah, absolutely." So I think it was 2012. I came back and we took it for a drive that night. I mean, amazing car, amazing technology. So I came back and bought the stock in Tesla, and I still hold it. So yeah, got lucky there. So yep. So I can't remember what my percent gain in Tesla is, but it's insane. So, but it was pretty cool. So, all right, good side note. All right, let's go ahead and get to it, people. Sorry about that. Yeah, yeah, nice it was. All right, welcome everybody. This is Michael coming to you from Game Edge on Tuesday, January 27th with our pre-market prep session. As always, we'll cover those three pillars: sentiment, structure, and trend. And then we'll get to some individual equities at the end if anybody wants to cover those. So again, quick market, this is our market trend model. Quick orientation is the bolded white line is that intraday instantaneous cumulative tick. If you're a 0DT trader, obviously you want to see that from lower left to upper right, indicating more buying versus selling in the overall market. And then we have these momentum moving averages. We refer to these as railroad tracks, but we like to see those stacked in the proper order. If you're a swing trader, this is basically your 1 to 3 and your 5 to 7 day look, 1 to 3 days or intraday bolded white CT, and then your 5 to 7 day look is your railroad tracks. And usually that is the overall cycle that we see within the market moving to the upside, unless we're in some choppy price action. So basically this is day kind of 2 of significant move to the upside. So we'll see where we're looking at with the CT at the end of the day. And then again, the colored ribbon continues to expand to the upside, red above cyan. So our mechanical portfolios are turned on. That's our P2P strategy as well as our wheel strategy. And both of those are listed on our gameedge.us educational blog. So you can cover those and if you would like to get more information on that. All right, moving on to our trading view market trend model. Again, this is intraday, instantaneous, 30 seconds to 1 minute, depending on what our members have set for the time frame. Obviously, a little bit of a move down yesterday, and then a nice recovery, and then some selling towards the end of the day. But we're starting to see these moving averages start stacking in the proper order and moving to the upside. That's what we want to see for a sustained uptrend. So we'll continue to watch this and see if this continues to morph into a longer term uptrend. Compared just to the pullback and sideways price action we've had. All right, let's move on. The SPX options complex, largest, most notional value. Obviously, this is the SPXA. We separate the SPXA and the SPXP. SPXA is our cruise ships or our tankers. February expiry here via the SPXA. This is 40,000 foot view and controls your longer term price action. So call dominated there. Transition areas, you can see GEX transitions fairly wide. DEX transitions a little bit more narrow. Staying above the DEX transition is going to be key though for bulls, and at least staying above 6,900 for upside speculation. You see 7,000, and then you also see up towards 70.50. You see the COI there at 7,000. So getting over 7,000 will be an important juncture or important hurdle. And then we have speculation all the way up to the upside via the SPXA. So we can move significantly further with call speculation to the upside. All right, moving on the SPXP, we've turned on the upper quartile. So 77% of our total OI is turned on now via our web app. And these next few expiries are going to be important. As you can see, they're significantly weighted. And then you see that the other dates are not really weighted expiry-wise. So we're going to watch these projection-wise to let us know where market participants are positioned. Again, the GEX and DEX transition is a little bit wider, 69.05 to 69.50, but staying above 69.50 will put us in a little more favorable call-dominated environment. You see the positive net delta there below us. That should be supportive. And then you see PGEX and COI up towards 7,000. So again, that's target to the upside. And we watch for some stalling into that overhead area. That's the highest speculation or sensitivity peak at the moment, where we probably most likely see some stalling. All right, moving on the SPXP GEX ratio. Again, this is like a put call ratio, but we add a time component, which is gamma. So it's weighted to short dated call versus put gamma. Again, we spoke about being just above the 1 level previously, that we're going to get an edge to the bulls. And if SPX started to price appreciate, we wanted to see this in a positive slope moving to the upside. Again, that would indicate out of the money call speculation was overriding the out of the money put speculation. And that means bulls are in control and speculators are opening strikes or opening contracts at higher strikes, so speculating that price is going to go higher. So again, we want to see this continue to the upside if SPX continues to have price appreciation, or at least staying above the 1, indicating call speculators and bulls are in control. Now we can see the GEX ratio, and this is separated out by the left-hand plane and right-hand plane on the overall options positioning. So that is your right-hand plane, which is your green dotted line. That's your speculation above spot price. The red dotted line is below spot price. And you can see, as with the resultant GEX ratio, when we see those out-of-the-money calls continue to open, the GEX ratio rises. Same thing here with the right-hand plane. It's in a positive slope. So again, that's indicating that out-of-the-money speculation continues to increase. We did see a slight drop in the left-hand plane. That's the in-the-money calls. But again, as spot price rises, this is spot price sensitive. So we may have captured some more removed some of those out of the money puts, captured some more of in the money calls. And this may just be hedging positioning below spot price, also seeing the drop. The main takeaway is obviously we're above 0 now. Delta balance is at +1. That's indicating speculators are in control as well as the bulls. And then we look on out in time. This is our projection for further expiries through the rest of the week. Obviously FOMC and Friday. We're railed at +1. So that indicates that bulls and call speculators are maintaining overall control. Even though you see choppiness in the overall left-hand plane and right-hand plane positioning, you stay above 0. So again, indicating that we have the opportunity for price appreciation to the upside, even through FOMC and into Friday, as you see that right-hand plane recover, as well as the left-hand plane just stay above 0. But that could also be just out of the money put speculation positioning or expiries of in the money calls. So quick takeaway is it's bullish. We're above a 0, and speculators are speculating for higher prices. All right, moving on the SPXP net stack command. Again, this is high sensitivity levels for today. You'll notice for the net delta, we have in the money calls and out of the money calls. This basically is a call dominated that we look for appreciation in price, as well as speculation to the upside. You see that 70-30 right-hand plane strike. That's the highest sensitivity point. And you see where out of the money calls become in the money puts, that'd be below 69.46. And I wrote this morning in our X post, 69.50 was where that transition point where it would be a little bit more cautionary. And you see charm here will be a significant headwind as we head into 70-30. So getting over that will most likely be difficult. And you can see where out of the money calls go in the money puts, that'd be dropping below 68.98. Obviously above us. So again, that's still going to be a headwind for most of the day. And then you see gamma, highest sensitivity points, as well as Vanna. You'll notice Vanna is almost 2x left-hand plane integral. So if we continue to see a drop in volatility and now the money calls go in, we could see a significant tailwind from Vanna as we push up out of the money calls in the right-hand plane strike at 70-30. So we'll continue to watch that. All right, moving on the SPXP 0DT for today. obviously chosen via our web app here. Call dominated above and below spot price. Again, I talked about the GEX and DEX transition fairly wide. This is just a positioning wise, just not necessarily, it's uncertainty, but if you're within this overall transition level, expect choppy price action. And you can see the net delta is red and green, but you look over here in the net OI, we're call dominated via the net OI, but the net delta here obviously is red and green back and forth there. And you see where the net charm imposes its highest headwind or tailwind, and that's right in that 69.85 level, which is the top of transition as well as the top of DS. And then you see 7,000 is just significant via charm. Obviously, significant out of the money calls though there sitting at net OI. So if we do take 7,000, again, it's going to add a lot of net delta, positive net delta to the overall complex. Most likely that would help push us up towards 70.30, depending on what our intraday call versus put speculation is. We also wrote one of our team members did a video about how we visualize the call versus put speculation. I posted that this morning, so make sure you check that out. And some of the new tools we're continuing to refine and that we'll be rolling out pretty soon. That will help us visualize that even better. So today, obviously, if you're within the transition, choppy price action, don't try to be a hero within this area. Above 69.85, we'd look for 7,000. Above 7,000, we look for 70.30 for price appreciation. Again, as long as the market trend model is up and call versus put speculators, call speculators are winning the overall battle. And then again, we talked about 69.50. Below that, we'd be a little bit more cautionary for a pullback to 69.25. We'd anticipate this to be stabilizing and supportive. And then if we're below that, we'd look for 6,900. All right, GameEdge.us, come check us out, newsletter, and put your email in. Beyond the Bell will be delivered on the weekends, goes over our thesis and our tools. As always, check out our free courses, GameEdge Fast Pass, flagship options course. And then come check our blog out. Again, those education posts that I talked about, the wheel strategy, P2P, as well as our other tools. And then our pricing tab will take you to our Discord, 14-day free trial, all the tools turned on, and extensive education as well as trading community with experienced traders helping you get up to speed, how to navigate the options market as well as individual equities. We continue to ramp up our individual equity ecosystem. We've had good feedback from all of our members about providing curated lists in the morning for high conviction individual equity trades. So yeah, we can look at UNH. I know there was some news. I think was there EPS also. So here's what we'll do. We'll look at this Friday first. So we're put dominated on UNH. So the structure, I believe, was already weakening before we had the large pull down. And this is what we talk about being extremely important, is understanding what the structure looks like heading into an event or further out on time projection wise. So put dominated above and below spot price. Obviously, structure looks very weak. You're below transition. You're below index. So let's look at the top quartile. So you see that actually the next monthly expiry is really the only one that's significantly weighted. It's put dominated. You're below 300. So COTMP at 285. If we continue to pull back on UNH, I'd look around 260 or 250 for possible supportive type action. But I would not be looking to the upside for UNH or trying to take a position at all on the long side for UNH. Hopefully that helps, Sashank, but the structure was weakening. I remember, I think a few of our members had posted the structure was weakening on UNH before we got into the news, or I think even the EPS. So, and that's just how market participants were already forward looking on position and sentiment of the stock. So they were already anticipating weakness in the stock before. And that's the tail wags the dog, what we talk about in the option structure. Market participants are already speculating directionally wise before you get news, EPS, or anything else that comes out. So that's why we continue down that thesis that the option structure really can let you know how sentiment is looking within the overall individual equity. So yeah, absolutely. So, all right, let's go ahead and look at the trading view chart this morning here, pre-market. So we're hovering right around 69.65. So again, if we do pull back below that, DS would be 69.50. The top of DS, 69.85. So again, if we're in DS, we just may be in this choppy mess back and forth to yesterday's price action, really with no directionality, and we'll be at the mercy of call versus put speculators. And remember, we're heading into FOMC, so obviously it just may be choppy price action from market participants. So. Okay, 250 is support. Yeah, that makes perfect sense where you saw that. Those in the money calls actually below us. Those are in the money calls sitting there on the quartile, right around 250 to 260. So that's, and you see that net OI there, but you see it's just completely surrounded with negative net OI. So puts just surrounding everything. But I would anticipate to see some sort of bounce into this area around 250 to 260. So most likely. So, all right. All right. Thanks everybody for joining us again this morning. Again, like and subscribe on X and YouTube. You'll be notified when we go live with any of our content or post it throughout the day. And I think that is it for today. Again, manage risk as always as we head into FOMC. We have the opportunity to move up via Vanna if volatility drops, and we'll continue to watch that. And 70-30, 69.85, 7,000, and 70-30 to the upside are those key levels for today. So, all right. Thanks, everybody. Have a great day.